So one of the things that is a bit of a bugbear for me, but and I want to get this message out as much as possible, is people need to look at how they can shave time off their loan. So currently, what I see a lot of is the minimum monthly payment being made, it being paid on a monthly basis, and basically, a lion's share of your money is going in interest. On a traditional, let's say your mortgage repayments are, I'm just going to use round figures here, right? Let's say they're 10 grand a month. You'll be shocked to know that 8,000 of that is interest, right? So you're not paying down a lot of the principal. Now, I feel like the way the banks market themselves is they're like, look at the rates, low fees, etc. But it's a bit of I feel like it's a bit of a distraction from what's actually really going on. And that is the fact that people are not paying or not paying down their loans fast. They're not shaving time off their loans. And that is the real issue. Whether you pay 6% on your rate or 5, 8, 9, that's not going to make a significant dent or significant improvement rather on your retirement. What's going to make a significant improvement on your retirement is actually if you have a 30-year loan and you strategically cut that down by 8 years, right? Because doing something like that is going to have a direct impact on the amount of money that's left over when you retire. Or what it can do is put you in a situation, and I see this a lot, where the owner occupier now has to sell the property, even if they've got, they might have a $4 million home or multi-million dollar home, and they might have a tiny debt on it, but they just cannot pay that now, right? And now they've got to sell that asset to be able to get rid of the debt and then work out what the next step in their life is going to be. It just doesn't need to be like that. It's just some simple strategic planning that I think that people need to do, especially in their 40s. I think that's probably a key part, because you're kind of in the middle of or near the peak of or approaching the peak of where your careers and salary is going to kind of be at, and then it may either plateau or decline. Not for everyone, but this is what I see when I'm looking at people's assets and liabilities positions, and also when I look at what they're earning versus what they were earning, etc. And then that puts them in positions where sometimes their debt's not paid off, or even if their debt is paid off, they still have to sell because they can't manage the upkeep and costs that are associated with a large property, right? What I would suggest people do is have a look at some simple strategies on how you can shave years off your loan now. Don't worry about it when you're in your 50s and 60s, because it's kind of too late then. You need to be looking at it as soon as possible. I'm not saying it's too late. It's never too late. But really, when you want to be trying to optimize how much of your money is going towards interest, you want to be doing it as early into the life of the loan as possible.